welcome back. And this would be the last video for budget chapter, and we are covering cash budget and flexible budget, one comprehensive problem from flexible budget concept. And let's get into the video. Okay, let's start with the cash budget problem. Prepare a cash budget for the 3 months ending 30th June 2022. Okay, the details given, which is sales given, materials that are given for every month given, wages given, overheads. Okay, all the prime cost items were given. See, material, wages, overheads given, and then credit terms are sales, which is color sales, which is 10 percentage of sales are on cash done, right? Okay, 50 percentage of credit sales are okay, 50 percentage of credit sales, okay, 10 percentage happen in cash, and then remaining 90 percentage is there, no, in that 50 percentage of credit sales, in that 50 percentage of credit sales is what they are referring to. Okay, 50 percentage of credit sales, okay, by next month, and the remaining 50 months is subsequent month. Okay, so this is what they are conveying. And for materials we are buying, the 2 months is the credit period given by the creditor. And for wages we are having one fourth of the expense, one fourth of expense paid in following month. And overheads, and off 50 percentage of 50 percentage of the overheads are happening in the current month, paying in the current month, and 50 percentage of the overheads are paying in the subsequent month. Okay, okay, and the cash and bank balance were given, and P&L, okay, certain other expenses also were given. Okay, these are all some receipts and payments. Okay, so we understood that in the question itself, we have seen, we can see that lot of payments and the receipts were only given. So what does the cash budget referring to? Cash budget, as we all know, that cash book, no, same kind of thing only. Cash budget is opening balance of cash plus receipts minus subtracting the payments which we made, gives us the closing cash balance, which is cash in hand after receiving and paying all the things. What we have in hand is this closing cash balance. Okay, this is with this outlay we are going to prepare a table. Let's start. Okay, now statement of cash budget 3 months ending, for the 3 months ending 30th June 2022. Then what would be that 3 month, which is April, May, June, right? Okay, as we already know that it starts, cash balance, sorry, cash book always starts with opening balance of cash, which is 6,000 rupees given in the question, right? See here. Okay, now add receipts. We'll leave a few space here, and we'll start with uh, payments, and then we leave few space here, and then closing cash balance. Okay, now what are all items were given in the question? Sales given, sales, 10 percentage of sales are on cash. Okay, say cash sales 10 percentage. Okay, 10 percentage means April month is here. See, April, May, June. Okay, so 1600 into 10 percentage, which is 1600. sorry, 16,000 to 10% is 1600, 17,000 into 10% is 1700, 18,000 into 10% is 1800. Done. Credit sales, just right, 90 percentage, right? Sorry, this is not credit sales. We should not add credit sales into the cash budget because this is cash items only. Collection from debtors. Okay, for this let's prepare a working note. Okay, working note. Collection from debtors, right? Okay, which are all the months were given? We are going to find out for April, May, June. Okay, 50 percentage of credit sales in next month, and 50 percentage of remaining credit sales is subsequent next month. Okay, now we found that 16,000 sales happened in 16,000 sales happened in April, right? 10 percentage is 1 minute, 14,400, right? This in this 14,000, 50 percentage collected on May and 50 percentage collected on June. Okay, this is what we are that's why we are preparing table here. Okay, divisible by 2, which is 7,200 received on May and 7,200 received on June. Okay, and then May have a balance of 17,000 and 17,000. Okay, May, which is 17,000 minus 1,000 and 700, which is 15,300. 50 percentage goes to June month and 50 percentage goes to July. So we have to take only June. For June, this is 7,650. Okay, for May month we are receiving here. Okay, right. Now for April we need to get sales from credit sales. We'll receive the credit sales amount and collections for the sales happened in March. Okay, right? March, let's take March. March is 15,000, which is 15,000, right? 15,000 minus 1,500, which is 13,500 divisible by 2, which is 6,750. Okay, from March we are for the March sales we are receiving 6,750 for during April and 6,750 during May. Okay, what about Feb? Okay, this part is waiting for the transactions, for the collections happen for the collections for the sales happened in Feb, right? So, okay, Feb is 14,000. Okay, 14,000 already cash sales happened for 10 percentage, then 12,600, right? Divisible by 2, 6,300 we are receiving in April month. This is the subsequent, this is subsequent next month. So that's it, we found it. This is for March, March, and this is for Feb. Right, guys. Now let's total it up. 14,850, 13,950, 13,050. Okay. Now let's plug these figures into the table. Okay, right. Now what else? Okay, we found the balances for collection from debtors, right? So what else? We have information in the uh, question. So for wages, creditors is 2 months, so that's not a problem. Creditors is 2 months, right? So materials, we are making a payment. For the fifth month, we are paying the amount during April. So 9,600, 9,000, 9,200. 9,200, right? Okay, then wages 14,000 for 0.25 percentage in following month. Okay, wages working note 2. Okay, April, May, June. Okay, same month, 75 percentage. Next month 25 percentage. Okay, 3,200 into 75 percentage, 2,400. 3,600 into 75 percentage, 2,700. And then June 4,000 into 75 percentage, which is 3,000. And then 0.25 into 3,000, 750, 3,200, 800, and then 3,600, which is 900, right? Yes, we have done. So let's total it up. 750, which is 3,150, and then 2,700 plus 800, which is 3,500, and then 3,000 plus 900, which is 3,900, 3,150. It's okay. Wages 3,150 paid during April, 3,500 for May, and 3,900 for June. Okay, the next thing is overheads. Half month of overheads paid on same month, half is next month. Okay, okay, next working note 3, working note 2, working note 1. Okay, working note 3, overheads April, May, June. Okay, 50 percentage, same month, next month. Okay, overheads just 1,000, 1,100, 1,150, 1,000, 1,100, 1,150. Okay, yes, right. 50 percentage of 2,000, 2,200, 2,300, right? So that's what we have given here. Let's of okay, 1,900 divisible by 2, which is 950. 950 comes here. 1000, 1100. Let's total it up. 1950, 2100, 2250 is the overheads. Yes, overheads. Just working note 3. 1950, 2100, 2250. Okay, guys. Yes, we done for overheads. What else we have? I think we have done with the calculation of uh, the major parts, and we have only need to plug the figures for the remaining things, right? Okay, let's do it. Plant and machinery will be installed in February 21. Okay, at the cost of 96,000. Monthly installment of rupees 2,000 is payable from onwards. Okay, okay, we are paying for plant and machinery installments. Okay, just 2,000, 2,000, 2,000. Okay, every month we are paying 2,000. Now, then dividend. Okay, the 5 percentage of dividend paid on June. Okay, into 5 percentage, which is just 10,000 dividend we paid. Dividend at preference share capital will be paid on okay, we paid 10,000 on June. Okay, advance to be received for the sale of vehicles. Okay, advance we are receiving 9,000 in June. Okay, and dividends from investments, we receive dividends which is 1,000. Okay, that's it, right? Okay, let's total it up. Okay, now yes, what's the total? 6,000 plus 1,006, 20,650. Yes, and then 20,650. Wait. This is total receipts. Total payments. Okay. Yes. 9,600 plus 3,150 plus now 16,700. $16,600. Okay. To 9,200 plus 3,900 plus 2,050 plus 2,000 plus 10,000, which is 27,350. And then let's take a balance to next month. Okay, so 2,650 minus 16,700, which is 3,950. Okay, let's take this. Let's brought forward this closing cash balance from April to May, and then let's total it up now. 1,700 plus 13,950, which is 19,600. Now 19,600 minus 16,600, which is 3,000. Then 3,000 is 3,000. Okay, plus 1,800 plus 14,850 plus 9,000 plus 1,000, which is 29,650 minus 9,200 minus 3,900 minus 2,250 plus 2,000 plus 10,000. Okay, which is 2300, right? Yes, this is how we need to prepare the cash budget using the functional method. Either uh, cash budget, I think this is there only in okay, this is under functional method. So cash budget is mostly comes under functional method. So we have done the cash budget problem from functional budget concept. Okay, let's go to the flexible budget area, and this is the max level problem which can be asked from cash budget concept. And if there is any exam previous year questions, I'll refer to some previous year questions also. For the concepts we have covered so far, I'll once again I refer with some other previous year question papers, and if there is any new type of problems that have been asked in the questions or examinations, I'll try to cover those also. We'll cover in future days. Okay, let's go to the next problem, which is flexible budget, right? Okay, the following information relates to. Okay, guys, let's quickly finish off this problem. Also, this the flexible budget also one of the simplest concept, like functional budget concept. So, just like we are given with some pre-default, we are given with some pre-default budget, and we are going to flex it to another level budgets. Okay, 80 percentage, 100 percentage. This is what we are going to do with flexible budget. Just we have to flex the budget value for the another output level or another capacity level. That's it with this flexible budget area. Let's quickly read the question. Okay, production activities of Omega Limited for the 3 months ending given. Okay, January. Okay, we are given with variable expenses, semi-variable expenses, and fixed expenses. Fixed expense, fixed overheads or fixed expenses are constant in total, and variable expenses are constant in per unit level. And the semi-variable is mixture of fixed as well as variable. We have to split out. Okay, right. And then what else information which has been given here is, it is further noted that semi-variable expenses remain constant between, okay, 40 percentage and 70 percentage capacity. It's constant. Okay, what level which is given here, which is 50 to 50 percentage given here. What we need to find out is, okay, 60, no change. 80 percentage also asked us to find out. Okay, 80 percentage, 100 percentage. Okay, and increase by 10 percentage between 70 percentage to 85 percentage. Okay, 10 percentage increase, and then 15 percentage increase between 85 percentage to 100 percentage. 15 percentage, right, guys? And then fixed expenses remain constant whatever level activity. Okay, always, right? Okay, not always. If there is any capacity going beyond 110 percentage capacity or 120 percentage capacity, we might rent out some land beside our manufacturing unit. So that time we might increase in, that is differential costing. That's a different concept. So we'll cover those also in further days. And then increase by, this is also we found out on that. Okay, sales at 60 percentage capacity, we have 25,000, sorry, 25 lakhs 50,000 sales, and 80 percentage capacity 34 lakhs sales, and 100% capacity 44. Okay, that's it. The information given with us is the very limited information, but uh, we are going to flex it as in the question itself. Okay, right. Now, mm, okay, statement of, okay, let's prepare it here. Okay, now, statement of flexible budget for 3 months ending 31/3/2022. Okay, particulars. 60 percentage capacity level. Okay, and then as for 80 percentage capacity level, and then as for 100 percentage capacity level, right? Okay, variable expenses. You want the first part. Okay, variable expenses, which is materials. Materials for 50 percentage unit level given, labor for 50 percentage unit level given, and then salesman commission. All these were given for 50 percentage unit level. Let's put it 50 percentage also here. Okay, 6 lakh, 6,40,000, 95,000. Okay, 13 lakh 35,000. Now this 6 lakh is there, no? 6 lakh should be divided by 50, and to flex it with any unit level we have to present 6, we have to put 60 or 80 or 100 to find the materials for the concerned capacity level, right? So that's what we are going to do is for 6 lakh divisible by 50 into 60, which is 7 lakh 20,000. Okay, and 6 lakh 40,000 divisible by 50 into 60, which is 7 lakh 68,000. 95,000 divisible by 650 into 60, which is 1,14,000, which is 16 lakh 2,000. Okay, now for 80,000, 80 percentage capacity level, let's find it out. 50 to 80, 9,60,000 into 100, which is 12 lakhs. 6 lakh 40 divisible by 50 into 80, which is 10 lakh 24,000, and then 12 lakh 80,000. 95,000 divisible by 50 into 80, which is 1 lakh 52,000, and then 100, which is 1 lakh 90,000. Okay, let's total it up. Comes around 21 lakh 36,000. Okay, and this comes around 26 lakh 70,000. Okay, variable cost we have flexed it to another levels. Like the same wise we have to find it out for semi variable cost. Semi variable cost, there is a catch. uh, there is an increase in cost for different levels. Up to 60 percentage there is no change, right? So let's find it out for 60 percentage. For 60 percentage level also there is no change. This is as similar to the uh, 50 percentage level, because there is no change till since 40 percentage to 70 percentage capacity, right? So just we'll copy paste the figures here, and let's go for another levels. May plant maintenance, just indirect labor 62,500, 62,500. Indirect labor, which is 2,47,500, and then salesman's salaries, which is 72,500, and then sundries, which is 65,000. Okay, comes around 4,47,500. And for 80 percentage, there is a rise of 50 percentage, right? There is a rate of 10, sorry, 10 percentage increase. Okay, 110 percentage. So 60,000, 62,000, 62,500 divisible by, sorry, into 110 percentage, which is 68,750. It's 1.5 into 247,500, which is 2,72,250, 72,500, which is 79,750, 65,000, which is 71,500, and then 1.15 into 62,500, which is 71,875, and then 247,500, which is 284,625, and then 72,500, which is 83,375, and then 65,000, which is 74,750. Okay, let's add it up. We'll get the values of 4,92,250, and then 5,14,625. Okay, we found out the semi-variable cost also. Let's go to the fixed cost, which is constant, right? So there is no change for any capacity level. It's not changing. So let's populate the figure. Okay, 2,10,000, which is management salaries, rent and expenses, salaries, rent and expenses, and then depreciation, and then sundry. Okay, the values are 2,10,000, 1,40,000, 1,75,000, 2,22,500. Okay, 2,10,000, 1,40,000, 1,75,000, and 2,22,500. Right, same for everything. Copy, paste. Okay, that's it. Let's find the values. Just comes around 7,47,500, 7,47,500, 7,47,500. Okay, so if we add it up, the all these values, we'll find out the cost for every capacity level. 60 percentage, what's the total cost? 80 percentage, what's the total cost? And 100 percentage, what's the total cost? Right, so we found out for we'll be finding out for all the levels. Okay, 16 lakh 2,000 plus 4 lakh 40,500, then 7 lakh 47,500, which is 27 lakh 97,000, and then 21 lakh 36,000 plus 4 lakh 92,250, and then 7 lakh 47,500, which is 33 lakh 750, and then 26,70,000 plus 514,625, and then 747,500, which is 39,000, sorry, 39 lakhs 32,125. Okay, now we have a sales figure. What's the sales figure? Just given in the question: 25 lakh 50,000, 34 lakh, 42 lakh, 5,500. 25 lakh 50,000, 34 lakh, and then 42 lakh 50,500. Okay, sales value is lesser, so loss. Sales value is lesser, So sales value is greater, so profit, and then this is profit. Okay, profit or loss. It's a balancing figure. 2,47,000. This is 24,250, and then profit of 3,17,885. Right. 500 minus 39,232. Sorry, this is okay, right? 2,500. Okay, this is the value. Okay, there is a change. This is the 3,18,375. Okay, yes, that's it. We have finished the flexible budget also. No, you guys have seen that how easy it is. This is just a calculation part only. There is nothing beyond this in budget. So let's start with some other new chapter tomorrow. Thanks.